There's a rare kind of opportunity in the markets, one that requires quiet attention instead of chasing headlines. It occurs when a well-known company is overlooked, not because of scandal or imminent failure, but simply because it's unloved. Monde Nissin, trading at the lower end of its recent range, is a prime example. At these prices, the investment question shifts. It's less about searching for the company's next big growth engine, and more about something fundamental. Will the dividends keep arriving while you wait? For investors seeking steady income, this is the focus, collecting cash payouts through market lulls, letting time and fundamentals do their work. The case for Monde Nissin isn't built on hope, it's built on hard numbers. Their board has already declared 2 significant dividends in 2025, funded not by financial engineering, but straight from operating cash flow. Let's put real figures to that confidence. For the 9 months to September 30th, 2025, Monde Nissin brought in 8.74 billion pesos from operations and paid out 2.7 billion pesos in dividends. That's a solid coverage ratio of about 3 times, the kind of cushion dividend investors want, especially in consumer staples. The dividend isn't bought at the expense of financial stability. The company closes the quarter with over 14 billion pesos in cash and a lower debt load, just 1.45 billion in loans payable. Their debt-to-equity ratio has improved to 0.34, signaling conservative balance sheet management. Management's recent public statements even confirmed their flexibility for continued and potentially higher dividend returns. But why is the market so hesitant? The answer lies in complexity. Monde has both a rock-solid Philippine staples business, noodles, biscuits, everyday essentials, and a meat alternative brand, Kuan, which is stabilizing but hasn't delivered consistent profits. Markets tend to punish companies with mixed stories, keeping prices subdued even when cash flow remains robust. For disciplined dividend investors, complexity can be an advantage. The market's focus on uncertainty creates a yield opportunity, provided you watch the essentials. Not everything, just what matters most. The first essential metric is cash dividend coverage, operating cash flow divided by dividends paid. As long as this sits comfortably above 2 times, the payout remains secure. The second is liquidity and leverage. Strong cash reserves and declining debt ratios suggest dividend stability. If liquidity stays ample, leverage stays in check, and dividends keep flowing, then pessimism is likely overstated, and investors are rewarded for their patience. Ultimately, the best dividend opportunities often come dressed as bad stories. Monde Nissin doesn't need to become a market favorite. It just needs to keep doing what it's doing, generating cash, paying dividends, and maintaining financial discipline. When the market's narrative is skeptical, and the checks keep arriving, the disciplined yield investor finds real comfort. Remember, the edge lies not in hope, but in discipline. Track the cash, watch the balance sheet, and let the numbers, not the headlines, guide you.